Imagine it's 2007. Howard Marks is on a call with his team at Oaktree Capital, warning them about a crisis lurking just beneath the surface. The buzz in the market is euphoria, yet Marks senses the cycle is about to shift. What if you could read the market like a book? Not just guess, but actually spot the rhythm before it's too late? Stick around, and I'll show you how to master that elusive pulse. You've heard of cycles, right? But what if they don't tick like a clock? They're more like waves, sometimes gentle, sometimes tsunami-strong. Howard Marks peels back the mystery and how these patterns really play out. In 2007, Marks sent a memo that raised eyebrows. He sharply warned of an impending credit crisis even as almost everyone else was riding a euphoric wave. His insight came from reading market behavior beyond price charts. Human nature, debt buildup, and excessive confidence all screamed trouble ahead. His early warning wasn't just signal. It became a lifesaver for savvy investors. Think of markets like the ocean. You can't predict exactly when a wave will hit, but you can learn to read the signs, the wind, the swell, the clouds. Marx shows us that market cycles don't follow a fixed schedule like a clock, but they have a rhythm governed by fear, greed, and shifting credit availability. Recognizing these cues helps you know when to surf and when to step back. The magic happens when you stop trying to predict every tick and instead learn to read the wave's shape, where it's building, cresting, or breaking. That's mastering the market cycle. Once you accept uncertainty and tune into the rhythm of human behavior and economics, you transform from a helpless passenger to a skilled rider, improving your odds significantly. Ever notice how crowd moods swing from elation to panic? Marx digs deep into how our psychological quirks pump the cycle's ups and downs, making markets feel like emotional roller coasters. Marx recalls the 1999 tech boom when investors chased gold rush-level gains fueled by greed. That mania wasn't just math. It was a collective psychology frenzy pushing valuations to insane heights. Like a herd stampeding off a cliff, rationality took a back seat to emotion. This story shows how greed can inflate bubbles, setting the stage for painful corrections. Just as greed inflates, fear dismantles. In 2008, fear turned once solid credit markets into fragile ice sheets ready to crack. Investors panicked, rushing to sell, freezing liquidity. Marx illustrates that fear acts like a sharp crack in this ice, spreading rapidly and collapsing confidence. This mechanism explains rapid sell-offs and why markets often fall faster than they rise. Here's the twist. The smartest gains come from swimming against the crowd, being a contrarian. Marx teaches that when everyone else is madly buying, you pause. When panic reigns, you look for opportunity. This contrarian dance doesn't mean always opposing the herd, but knowing when to step off the emotional roller coaster to earn better returns. This isn't just theory. Marx lays out practical ways to recognize cycle stages and adjust your strategy, letting you spot turning points and act before the crowd catches on. Howard Marks explains the market in 4 stages: early cycle optimism, mid-cycle euphoria, late cycle caution, and recession-induced despair. Each phase has distinct characteristics you can learn to recognize. For example, mid-cycle is when valuations are peaking and risk-taking ramps up. Knowing this framework is like having a map while others wander blind. Credit availability is the bloodstream of the market cycle. Marx compares it to the gas pedal under the economy's hood. Too much fuel and the engine overheats, too little and it sputters. By monitoring credit spreads and lending standards, you gain real-time clues about where the cycle is headed, making your moves more informed and timely. The biggest advantage is positioning yourself before the cycle turns. Instead of reacting to market crashes or bubbles after the fact, Marx urges you to build cushions, scale back risk when optimism peaks, and be ready to buy when fear is rampant. This proactive stance transforms market uncertainty into opportunity, elevating your investment game. Remember that call back in 2007? Marx wasn't guessing, he was reading the subtle signs others ignored. The market isn't random chaos, it's a dance of psychology, credit, and history all spinning together. Your takeaway: start noticing the waves, the moods, and the rhythms today. Next time the market buzzes with feverish talk, pause and ask, where are we in the cycle? Try that. It's your first step toward mastering the market's hidden pulse. Subscribe for more book summaries like this one.